Welcome back to the deep dive. Today we are strapping in for a really high-stakes look at what's become one of the hottest narratives of 2025.
For sure.
We're talking about the battle for dominance in prediction markets. It's really a classic showdown between two giants, both backed by just staggering amounts of capital.
Right. And our mission today is to, give you a real shortcut to understanding this whole war. We've gone through a huge stack of the recent source material, really focusing on the explosive stuff from October 2025.
And we're going to unpack the strategies of the two leaders, right?
Right.
Polymarket and Kalshi.
Exactly. We'll look at their funding, their partnerships, and we're going to drill down into some, frankly, surprising statistics that show just how intense this fight has become.
Okay, so we have to start with just the sheer scale of the growth here, because prediction markets, they're not a niche thing anymore, are they?
Not at all.
October 2025 wasn't just busy, it was a record-breaking month for the whole sector.
The figures are absolutely stunning. And what's really surprising is the context. Our sources show that the total trading volume across prediction markets hit $8.5 billion.
$8.5 billion. Wow.
Yeah. And if you look at that historically, that volume, it actually surpassed what we saw in the previous November,
The election month.
the U.S. presidential election month, which, is usually the absolute peak.
Okay, wait, hold on. The U.S. election is like the Super Bowl for this sector. That's always the high point for volume and public interest. So why did a normal October just crush that record? What was driving all this demand?
Well, that's the key insight, isn't it? It tells us the sector is finally moving beyond its reliance on these big cyclical political events.
So it's more sustainable.
It's becoming infrastructure-driven. The growth now is fueled by new types of markets. Think highly liquid crypto predictions, continuous sports betting markets from these new partnerships, and of course, just constant geopolitical uncertainty. That stuff doesn't run on an election cycle.
So this isn't some temporary spike. It's a real structural expansion, and the public is jumping in. The data shows the number of individual traders peaked at 478,000.
Nearly 500,000 people.
That's a huge number of people actively trading. It's almost like the new sports bar debate, but, formalized and with real money on the line.
That kind of user growth shows massive product market fit, and that brings us perfectly to the capital war that's funding it all.
Okay, let's unpack that. Let's start with Polymarket, because they made a move that, honestly, it felt like a seismic shift in how traditional finance even looks at this space.
Power move is exactly the right term for it. In October, Polymarket announced they raised a staggering $2 billion.
$2 billion. And with a $9 billion valuation, which is just astronomical. But the detail, the really crucial part, is where that money came from.
Right. It came directly from Intercontinental Exchange, or ICE.
The parent company of the New York Stock Exchange.
Exactly. When you see a player like ICE put that much capital in, you realize this isn't just some VC looking for a quick flip. This is a foundational legacy giant looking to future-proof its business.
They're signaling that they see this as a legitimate future product.
I mean, they must be. They're maybe even positioning Polymarket for eventual integration with traditional futures markets, or as a key part of their data offerings.
So that completely changes the narrative from, a crypto startup to a potentially regulated financial product. What does Polymarket do with all that backing?
With that kind of TradFi weight behind them, they are now singularly focused on one thing: returning to the regulated U.S. market.
Which would be huge. That's the biggest pool of capital in the world.
And getting back in legally would eliminate Kalshi's single biggest advantage.
But the U.S. regulatory environment is, well, it's notoriously difficult. How confident are the sources that they can actually pull this off?
The confidence is extremely high. And the sources point directly to that ICE partnership. They're noting a 90% probability of Polymarket's return by the end of the year.
90%, that's very high.
It is. When you have the NYSE's parent company in your corner, it suggests a very specific, well-funded regulatory path is already being paved. ICE's regulatory muscle is expected to smooth the way.
So if they get back into the U.S., they're not just thinking about rules, they're also thinking about users. Polymarket also announced the launch of their PLY token for 2026.
Right. With a highly anticipated airdrop for traders.
So it's a two-pronged attack.
Exactly. Regulatory compliance meets crypto-native incentive. And that announcement, it had an immediate effect. Activity on Polymarket shot up by more than 20% right after the news broke.
It just shows how powerful that promise of future rewards really is.
It drives volume instantly.
Okay, so let's shift over to Kalshi. In that same month, October, they weren't just sitting around. But their approach was, well, it was completely different. Pure Silicon Valley.
Absolutely. Kalshi announced a big funding round of their own, $300 million, securing a $5 billion valuation.
Which brings their total raise to over $500 million.
565 million, yeah. And their lead investors were, the absolute titans of VC, Sequoia Capital, and Andreessen Horowitz.
So you have this clear battle of capital, right? Traditional finance infrastructure versus pure play venture capital. And Kalshi's counter strategy, it was less about tokens and more about immediate user growth.
For sure. They landed that massive partnership with Robinhood.
The retail brokerage platform.
And that just opened the floodgates. Thousands of new mainstream retail users who probably wouldn't touch a decentralized crypto platform. But what's really fascinating is what those users are actually betting on.
It's all sports, isn't it?
Pretty much. Traders can bet on NFL and college football games right there in the Robinhood app. And that has totally dictated their volume composition.
And the numbers are just wild. The sources say about 90% of Kalshi's entire prediction volume comes directly from those regulated sports markets.
90%. It's a huge concentration, and it's a major risk. If that Robinhood deal ever faced a regulatory challenge, or if sports betting competition just heats up, Kalshi's liquidity could face a serious threat. They're banking everything on U.S. sports.
Which means diversification has to be their #1 priority. And to expand beyond sports, the sources noted they partnered with a bunch of big crypto influencers on X.
Yep, names like John Wang, ICO Beast, Zero X Ultra. It's a very deliberate play. They're trying to get that crypto-native audience, the one that understands airdrops, which is Polymarket's strength.
So they're trying to convince them that a regulated, centralized platform is still worth their time.
Exactly. They're trying to capture crypto enthusiasm without actually offering crypto incentives.
Okay, that's fascinating context on the strategies. But let's dig into the actual performance numbers from October, because that's where the story gets even tighter.
Right.
A direct comparison of the key stats. Who actually won the month in terms of volume?
Well, despite all of Polymarket's funding and token hype, Kalshi. Kalshi did slightly surpass them in total trading volume for October. It was $4.4 billion for Kalshi versus $4.1 billion for Polymarket.
That's a photo finish. It's basically a rounding error. But what does that tiny gap tell us about the momentum?
It tells us there's been a huge momentum shift. I mean, just look back to September. Kalshi was the clear dominant leader. They pulled in $2.9 billion versus only $1.6 billion for Polymarket.
Wow. So in 1 month, Polymarket nearly doubled its volume.
Almost tripled it, yeah. That funding news and the hype around the PLI token, it's clearly working to close that gap very, very quickly.
But the composition of that volume is still key, right?
Yeah.
We have to reiterate, Kalshi's volume is overwhelmingly sports through that regulated channel.
While Polymarket is much more diversified across sports, politics, culture, and of course crypto markets, that diversification is a kind of risk hedge.
And if we look past just the dollar volume, what else do the numbers show us?
Well, Kalshi also leads in transaction count. They registered 16 million transactions compared to Polymarket's 12 million.
Which usually implies broader, maybe higher frequency engagement. But what about the market depth? Open interest is often a better metric for real liquidity, isn't it?
It's a critical distinction, yeah. Open interest tells you how much capital is actually locked up in markets for the long term, not just in and out day trades. And as of November 12th, Kalshi has the lead there too. It's $297 million in open interest versus $216 million for Polymarket.
So why do you think Kalshi is leading in that long-term capital commitment?
It's most likely driven by the predictable nature of their sports markets. If you're betting on the outcome of the NFL season, for example, that capital is locked up for months. Polymarket's volume, while high, might be driven more by, short-term crypto or political markets that turn over really fast.
Okay, let's shift to the future then. Let's talk incentives. The rewards race. The source material is very clear that airdrops are the ultimate user magnet.
Oh, absolutely. And Polymarket has confirmed their plans. Given that new $9 billion valuation, the expectation is that when the PLI token launches, its market cap will be substantial.
Which means the airdrop could be very significant for active traders.
It could be huge. It's the perfect example of leveraging crypto-native mechanics for massive growth.
And that's in direct structural contrast to what Kalshi is doing.
Precisely. Because Kalshi is so highly regulated, the chance of them ever issuing a token reward is, it's considered extremely low, probably zero. They have to rely on partnerships and product quality, not crypto incentives.
But this fight isn't just between these two giants anymore. Our sources introduced a third player, a sort of wild card entering the ring, Opinion Labs.
Right, Opinion Labs. The new entrant backed by YZ Labs, and they're using the exact same aggressive playbook as Polymarket. They've launched a point system with promised future rewards, and the platform just opened up to everyone.
So this is an ecosystem play, trying to capture some of this new liquidity.
It's seen as an attempt by the BNB ecosystem, through YZ Labs, to get a piece of the action. And if you look at their track record, like with the recent launch of Aster, the sources suggest YZ Labs knows exactly how to build hype and deliver rewarding tokens.
So the opinion airdrop could also be pretty substantial.
It could be. It's appealing directly to the users who are currently farming points on Polymarket. But, and this is a big but, the source material included a crucial warning we have to share.
Okay, what's the catch?
The catch is liquidity. Market liquidity on Opinion Labs is still quite low compared to the big two. The capital just hasn't flowed there yet. So users should definitely trade cautiously. Treat it more as an incentive farming exercise for now.
Okay, good to know. So let's try to synthesize all of this. What's the big takeaway from this deep dive?
Well, the competition it's not just heating up, it's entering this phase of just unprecedented capital intensity. We're watching a clear war fueled by traditional VC money pouring into Kalshi on one side.
Right, focusing on regulated access and growth.
And on the other, this aggressive injection of pure TradFi capital into Polymarket from ICE.
And their strategies couldn't be more different. Kalshi is winning with high-volume regulated sports betting, but they're under pressure to diversify away from that 90% concentration.
Meanwhile, Polymarket is leveraging its massive valuation to push for a quick regulatory fix in the US, all while pumping up activity with that powerful promise of a future token airdrop.
So as we wrap up, I want to leave you with a provocative thought to mull over. Since Polymarket is now backed by ICE, the parent company of the NYSE, and is aggressively seeking a return to the regulated US market, what does this sudden convergence between traditional finance and these crypto-native platforms really mean for the future structure of these markets?
That's the billion-dollar question, isn't it?
Will regulation basically force them all into one standardized box? Or will we continue to see this split between centralized, regulated betting on one side and decentralized, incentive-driven production on the other, as the great dividing line in this $8.5 billion sector?